Welcome to the Top Business Leaders Show, powered by Rise 25 Media. We feature top founders, executives, and business leaders from all over the world.
Hi, Chad Franzen here, co-host of the Top Business Leaders Show, where we feature CEOs, entrepreneurs, and top leaders in the business world. This episode is brought to you by Rise 25. We help B2B businesses reach more clients, referrals, and strategic partnerships and get ROI through done-for-you podcasts. If you have a B2B business and want to build great relationships, there's no better way to do it than to profile the people and companies you admire on your podcast. To learn more, go to rise25.com or email us at support@rise25.com. Michael Uadiale. Am I pronouncing your name right, Michael?
You did. You got it.
Nice.
I was waiting for that.
My guest is Michael Uadiale, a seasoned CPA and master tax advisor with over 25 years of industry experience, including 18 years running SMEED CPA. As the founder of a seven-figure revenue firm with 15 employees, he has developed a proven system that helps entrepreneurs achieve financial freedom within 5 to 7 years through strategic tax planning and wealth building. His expertise has helped clients save over $15 million in taxes over the past 7 years with an average tax savings of $31,426 per client annually. He is also a successful entrepreneur who has founded 6 other businesses, including investments and innovative telehealth software. Hey, Michael, thanks so much for joining me today. How are you?
It's my pleasure, Chad. Thank you for having me on your show.
Yeah, it's great to talk to you. Hey, as I mentioned, you've spent more than 25 years working in accounting and tax, nearly 2 decades leading your own firm. How did your early experiences in accounting shape your decision to start building and continue to build SMEED CPA?
Thank you for that question. I think my experience personally really informed my choice of how to run our practice. As you can tell from my accent, I'm not originally born in the United States. And when I came out here about 28 years ago, I worked in a high-tech company, got a bunch of stock options, had no clue what all that meant for taxes. I just passed my CPA test. I had not gotten my CPA license. All somebody told me was, see a CPA so as to be able to figure out your taxes. Well, I took their advice and I did hire a CPA. The whole idea was, hey, help me reduce my taxes legally and ethically, because I knew I was getting a whole boatload of money from my stock options, right? Well, I got a big bill from him, but nothing was done, all right? The long and short of it was, when my taxes was filed, I owed some very significant amount of money, close to $100,000 in taxes, right? That really set me up thinking. So when I was ready to get out of corporate America, I said to myself, I do not want any other person to be able to experience that bad taste that I got in my mind. So when we started our CPA practice, we have been hyper-focused on ensuring that business owners only pay what they need to pay, okay? So that's been my driving force. And when people talk about me having run SMEED for the last almost 20 years, it will be 20 years next year, it's just gone so fast because I just enjoy continuing to do that over and over and over again. Yeah. So that's been my personal story, and that's what drives me.
Very nice. A central theme of your work has been helping entrepreneurs use tax planning and wealth building strategies to maybe gain a little bit greater control over their financial futures. What to you does financial freedom mean, and why do you believe some entrepreneurs can reach it within 5 to 7 years?
Financial freedom is different for everybody. So the first thing, let's kind of get a right framework of what financial freedom is, right? Many times when I use that language, I'm very quick to let my audience understand financial freedom does not mean you are retiring and going fishing for the rest of your life. Financial freedom only means, to me, you give yourself the option to do what you want to do, when you want to do it, how you choose to do it, with whom you choose to do it, and not have to allow money be a decision in the factor, right? So you could be in your 30s, you could be in your 40s, and you can be financially free, but still very active in the marketplace. However, you can afford to take 1 week, 1 month, 3 months off, and your financial income building is not compromised by the fact that you are not in the game. Okay. I have a client since 2022. He's been out of the United States. He's traveling all over the world. The young man is not even 45 yet, right? His business continues to grow. Is he retired? No. Is he financially free? Absolutely. When he came to me 2020, he was very clear. He said, look, I want to be in a position where I am able to generate $50,000 every month from my real estate portfolio. And so as he was making money from his cash cow being his commercial cleaning business, he was building his real estate portfolio. All right. So from 2022, he was able to hit what he wanted to hit. The commercial business of cleaning is still running. He has business managers running that enterprise, but he's literally living off his real estate portfolio. He's traveling all over the world. He told me he wants to be able to go through, I think, 40 or 50 countries before he comes back to the US. So that is financial freedom. It just means you have the option of being able to say, I'm taking 1 week off, I'm taking 1 month off, right?
Mm-hmm.
Not to kind of put my personal stuff there. I've been out of work in the last 4 weeks, right? Because I just did some medical procedure, right? I wasn't stressed about me not being on my desk. Okay?
Mm-hmm.
I wasn't, because all of the enterprises are running independent of me. That's the word freedom there. Okay, so that's what financial freedom means. Now, to talk about, okay, how do we achieve that and help people be able to shrink that runway between where you are today and where you want to get to, right? It's a clear financial vision. Unfortunately, in America, many of us, maybe up to 85% of people, spend more time and energy planning for a 2 weeks vacation than planning what their financial freedom is going to be. Okay? Because the reality is, our tomorrow is a function of what we choose to do today. Every of our tomorrow is an aggregation of all of the marginal things we are doing daily. So if people are very intentional as to say, here's the goal I want to get to, there is clarity between knowing this is where you are today, point A, and if this is your goal, point Z, you can see what the gap is. What our practice is really excellent at doing is we make our clients, we force them, in most cases, unfortunately, we force them to give us that vision map financially. It's easy for us to extract from them where they are today because it's all about assets and liabilities and what's your cash flow. We can do that any day because that's what we are, accountants, right? But I have no clue idea of where the heck are you trying to get to? When do you want to get there? So when you come in as a client, we want you to give us that point Z. And so once we know where that point Z is, then our game plan is to say, we know how you make money. We know how you spend money. The idea now is to be able to really use the tax profile to really shrink that gap. Because anybody who knows how to do great tax planning legally, ethically, and morally, what you are doing is you free yourself from the tax jail by at least 18 years. So that's how we do it. Yeah, because think about it. For most high income earners who are making a boatload of money and are not very intentional in their tax planning, do you know what they're doing? They're literally giving maybe close to 3-4 hours of each of their working day to the tax guy. And the unfortunate thing is, the tax man is not asking you for this money, okay? Really, most people have just come to think, oh, this is how it has to be, is the cost of doing business. Now, the tax code is just a whole incentive to make you behave the way the government wants you to behave, to make you invest in the industries and the areas the government is trying to make private citizens push capital into. So all of those are the totality of what we bring to bear. And so we free up clients' cash flow, allow them to be disciplined to continue to reinvest those tax savings. So if it's supposed to take you 12, 15 years to get to your point of financial freedom, yes, you can shrink 5 to 7 years off that very easily in 3 to 4 years. There's nothing magical about it. It's just that we've gotten discipline on doing what we do with our clients.
You mentioned the phrase tax jail. What does that mean?
What that means is, so I'm going to give you a typical example of somebody in California. If you are making anywhere like 300,000 adjusted gross income, right? And you are a resident of California, your marginal tax on the federal side could be as much as 37%, right? And then from the state of California, 9.94. So all put together, at a point, or after a particular point, for every one more dollar you're making or earning, almost 47 cents of that, it's going into taxes. Okay? When you translate that into time, for most of us, we are going to be working from maybe the age of 18 to 60 or 65. When you aggregate the amount of the time that the average person puts into the marketplace and see that of that proportion of time, 37% of it goes to the tax guy if you are not planning, that is a tax jail that people put themselves into.
Hey,
so when you plan, you free yourself from that jail.
So there's a big difference then between, a lot of business owners probably, the year's probably over and they probably send their tax information to their accountant, and then there's tax preparation. The accountant prepares the taxes and you pay them. But there's also tax planning, which is what you're advocating. Kind of elaborate on the difference between the two.
Chad, I think you just really, whoever is listening to this episode, right? They should earmark your question. Unfortunately, because I see this every day, I'll say at least 60% of most business owners still operate with the way you just explained, which is they have this avoidance-hate relationship with taxes. And so they don't think about it. They don't want to discuss taxes until it's close to April 15th. And when that's your approach, you're already playing a losing game. What I've found out in almost 20 years, the ultra wealthy are very intentional with taxes. Every decision they are going to make, they want to first of all ask themselves, how do I optimize this decision from a tax perspective? And so they're constantly talking to their tax advisors. Okay? Tax planning really, it's you not changing your taxes, but changing your facts to align well with the tax code. In a way, when I say change your facts, I'm not talking about lying. I can give you a simple example, right? I'm putting on a shirt. This shirt has some inscription right here that is the name of my company. It changes this from a non-deductible wear to a uniform if I want to deduct this. And so typically when clients are working with our practice, don't come to us asking us, can I deduct anything? The question really needs to be, how can I deduct? It's a very different framework. Because like I said, the tax code is a set of incentives. Most business people think the government is out to get them through taxes. That's not true. I preach that that's not the essence of taxation. I'm privileged to have seen taxation all over the world. The United States tax code, it's such a great thing. And I wish people will embrace it and see it as a roadmap to their financial success. Because what the government has done is say, if you want to get all of these benefits, here are the things you need to do to get those benefits, right? Mm-hmm. But because most people have this love-hate relationship, they have this framework of thinking taxes is bad. It's just the government taking money out of my pocket and all that kind of stuff. They don't talk to an accountant. I tell anybody who cares to listen, If you are a business owner and you are not having very serious interactive meeting at the very minimum once every quarter with a tax advisor, not a tax preparer. I mean, we live in the world of AI, okay? Tax return is going to be free in the next 2, 3 years. Nobody's going to be paying for it. I don't care how complex it is. That's easy to do. Anybody can take data and feed it into a tax software and give you a tax return. What you need is a tax advisor, a strategist who is able to take your today's data, understand where you're trying to get to for tomorrow, and be able to now align those two things using the tax code the government has put in place. That's why for us, it has to be legal, it has to be ethical, it has to be moral. So that when you get there, you are sleeping well, not afraid of an audit later from the IRS.
Would you say that, has it been your observation that a lot of your counterparts in the accounting profession offer that kind of tax advice, or do they just focus on, what's happened in the past and we're going to prepare your taxes for, your past taxes rather than kind of giving you forward-looking advisory work?
I would say in the last 2 years, to be honest, there have been an increase in many accountants understanding the need to becoming more proactive instead of being reactive. Okay. Mm-hmm. And the reason for that is clients are getting more savvy. Okay. I mean, I'm glad. It's a great thing to see that many clients are getting more sophisticated to understanding the guy who is preparing your tax return is not necessarily saving you dollars in taxes. All right. So most entrepreneurs who are high performing entrepreneurs, they are very critical in selecting who they should be working with. And I think that's forcing many in our profession to understand it's no longer about tax return filing. Like I said, with the advent of AI, it's a change world, okay? Any CPA practice whose main source of income is filing tax returns between January to April, they will be toast in the next 2, 3 years. They'll have no business.
Oh, wow. Wow. So SMEED CPA has something called a decide framework. It's kind of like a 6-part framework that examines deductions and entity type and other things. Tell me a little bit about that and how it helps create or to evaluate a client's tax position.
Yeah, thank you for that. So I love acronyms. So most of the things I do, I try to figure out how to put it in a simple way that, one, makes it easy to translate my knowledge. 2, makes it also easy for my clients who are not tax accountants to be able to understand, hey, here's a journey, and this is how this journey is going to go. Okay. The decide framework pretty much is, one, the first thing there is discover. We're trying to, first of all, discover what is your financial profile, right? We're trying to understand what I talked about earlier. Where are you today? Where are you trying to get to? Once we get that, the next thing is the E, where we are engineering the tax structures. Okay? Because now we understand where your happy place is that you're trying to get to. You know what? Income is earned, but wealth is engineered. So engineering tax savings is a skill and an art that you got to develop. So the E stands for engineering. And then once we've been able to engineer that, we really train you on the C, which is helping you take the savings. The C stands for capture. We capture the growth and get you to begin to really turbocharge that growth through velocity. If you make $10,000 today by way of a savings, you put that $10,000, it makes you $2,000. Next time around, you are investing 12, not 10. So that C stands for capture. And then the next phase is we now integrate, because as you begin to go up the ladder and you begin to make more money, then there are complexities. So the I stands for integrate. We integrate some very advanced structures because at a point where you begin to make a whole lot of money, it's important to be going to plan for the successive generations coming after you. So advanced strategies come into place. That's the I, integrate. And then we help you defend against what we call tax erosion. Because when you make a whole lot of money, when you are dying, which is something that will happen to everybody, the government is waiting. But there are legal ways to minimize how much the government can get from all of the legacy you've built in your lifetime before it passes on to your beneficiaries. And then the E stands for empowering the next generation. So typically, many of our clients, again, like you said, I've been in it now for 20 years. A lot of my clients have reached that point where they're thinking legacy. And so one of the things we really do is to empower that next generation that is coming after them. Okay? We really teach them on the need not to wait. Because sometimes, unfortunately, you find it's at the time people are at their deathbed or they have died that their families even know what their net worth is. And if that next generation are not really trained on how to manage what the patriarch or the matriarch has built, it's going to be gone by the next generation. So we bring that next generation along so that they can also get to the place where they continue what their parents have done. So that's our DECIDE, is the DECID. It's a structure. We're very intentional. There are milestones in all of those steps. But again, it's something we have found it's been successful for people who focus.
So DECIDE is an acronym, DECID. I know there's something else called a bond rule, BOND.
Oh yeah, that's so fundamental. The bond is really inside of what you could call in the E stage of engineering, right? Again, like I said, I love acronyms because what bond does is help you as a taxpayer really know very simplistically whether or not a particular cash outflow can be a deductible business expense or not. And so that bond stands for, hey, is this a business expense? Okay, that's what the B stands for. The O means it's ordinary, meaning is it something that is typical in the line of business that you are? All right, that's what the O, ordinary, stands for. The N stands for, is it a necessary thing? Is it necessary for me, for example, to fly a private jet on a trip from here to, okay? And then the D, which is big, is deduction documentation, right? Because the Internal Revenue Service cares about the paper trail. Show me the money by the paper trail. If you're telling me you spent $200 on a business meal that had you, your spouse, and your kids, and you are saying that's a business deduction, the IRS needs to understand and know that, yeah, this is a business deduction. You're not just going to tell them, yeah, we spent $200. There needs to be a receipt. That receipt needs to have a place. It needs to have a price or the amount spent. It needs to have another P, the purpose of spending that money. So the BOND really is one of the so much fundamental things we teach our clients. You got to understand that, because otherwise you keep coming back to us and say, oh, can I deduct this? Can I deduct this? You can figure that out if you truly understand how to use BOND. Is it a business expense? Is it ordinary? Because what may be ordinary in your line of business may not necessarily be ordinary in my line of business, right? Every business is different. So what Tom Jones is doing is different from what Sally is doing. So those are the things that we really make our business owners understand from the very get-go.
So you have tax deductions, and then something else that can reduce what someone owes would be a tax credit. What do entrepreneurs frequently misunderstand about the difference between the two?
You are just hitting the right buttons, Chad. So, a credit is a very powerful thing. So think about it this way, right? I typically say to my audience, a credit is like 4 times more powerful than a deduction. Okay? And I'm just going to give a very simple example. If I spend $100 on a meal with a business associate and I deduct that as an expense, you are going to find that typically I may be deducting 50% of that $100. And if your tax rate is let's just say 20% for ease of math. That $100 have saved you $10 in taxes. Now, if you flip it and it's a credit that you're getting, what a credit does is a credit literally reduces your taxes dollar for dollar. Literally, what a credit is doing for you is the government is paying your taxes for you by reason of one tax rule or the other. Okay? So that's why, on a very simplistic level, I say to any listener, a credit is 4 times more powerful than a deduction, right? And there are thousands of credit. It depends on the line of business that you are in. So it's so important that any accountant that you are working with truly understand your line of business as to be able to look for any applicable credit in that line of business and ensure that the taxpayer is really leveraging and taking advantage of those credits. Okay. I mean, there are simple credits like, okay, work opportunity tax credit. What is it? That's pretty much saying the government is saying, well, because you've hired some people who are in the category of the demographics, maybe they are just coming into the workforce for the first time, or maybe they are people that are being rehabilitated into the society. If you do it the right way, you get anywhere from 2,400 to 9,600 as a tax credit for hiring somebody you're going to hire anyway, right? But the government is saying, I'm giving you a credit because you're helping us take off the street unemployed people. Okay? That credit is not just, oh, it's like, hey, I'm giving you 9,600. What's better than that? So there are just lots and lots of credit. I mean, we work with a lot of business owner in the intelligence and developmental disability space. And then there are lots of credits. When they modify the homes that their clients have to live in, the government gives them credit for that. But if you, as the tax advisor, you don't know that, you just treat that as a deductible expense, which is like, ooh, professional malpractice.
I've heard that there's some tax strategies out there that don't necessarily eliminate a tax obligation, but they allow business owners to retain and invest capital for a longer period of time, like deferring the tax obligation. When can that be more valuable than simply trying to reduce the current year bill?
Oh, timing is everything. Okay, I gave you, when I was breaking down our DECIDE, I gave you our working framework of that. That same decide for our clients, the D is deduct, the E is entity structure, the C is the credit and conversion, the I is the income shifting, and then the D is deferral, and the E is elimination. What you're talking about is the last D, deferral. So timing matters, okay? There will be times where you look at a situation, what may be best is to defer the taxes. I'll give you a typical example. Let's just say I'm working right now with a minor baseball league athlete. Okay, he's just 18 years. Okay, but this young man he's going to be making, I think, about 3 million in the next 3 years or so while he's in college. All right, there is no guarantee that he's going to get to the major league. All right. But he is likely to be in a situation where between the next 3 years, he could easily make close to $10 million. All right. He is better served deferring whatever he can defer to later years, where if for whatever reason he never makes it to the major league, his income may not be as high, all right, in those years as compared to now. All right. So instead of that 3 million being hit with 37% marginal tax bracket now, he can begin to defer those things to a point where, at least even if it's a 10 to 15% spread he does, it's a significant amount of money. And so that's why things like 1031 exchange is very popular and important for a real estate investor, right? Because what are you doing? You're just kicking the ball down the road. You're kicking the ball down the road. Now, that's why we have what we call buy, borrow, and die. What does that mean? You buy a real estate property today for $200,000. It gets to get equity 3-4 years later. It's worth 400. You borrow out of that same equity. You now buy another property, and then you continue to do a 1031. So you could start with a $200,000 property. By the time that person is dying, he or she has a property worth 10 million. But guess what? When that person dies, his beneficiaries pay zero because of how the estate tax laws work. So deferral is one of the very important game. Time, money, and timing is important. $10 today is worth a whole lot more than $10 even in 1 year from today. So that's part of the toolkit we use.
I know a lot of people probably, myself included, I meet with my accountant maybe like once a year, every year in late March. I know you guys at SMEED Advisory, your advisory process includes several meetings throughout the year. How does that kind of help a client's financial results compared with, what I just described?
You know what? We tell our clients before they come on that this is a consultative and educational process. It may sound harsh, but I say to clients, I can care about your money more than you. And I say that upfront because some people make the mistake of thinking because they paid us a boatload of money, all the work is now on us to do. That's not accurate. I'll teach you and coach you on what needs to be done. But there are things that you as a taxpayer has to do so that we can document the tax savings we're trying to get out of those strategies, okay? So when we have all these meetings with our clients, it's not because we want to have the meetings. The meetings are so critical and so needful because if I'm going to say to you, Chad, I need you to use a strategy. Let me just give you a very simple strategy. All right, you got a minor child that is 12 or 7 or 8 years old, and you have something as simple as an S-corp. We want you to employ your minor child in the business. The documentation is important. Implementing a strategy means you, the taxpayer, understanding what the strategy is, how to implement it correctly, and how to document the implementation. So if you are ever audited, you're not running around afraid or panicking when that IRS letter comes, because anybody can be audited. Okay, so it's so important to us that our clients be very engaged. If you are not going to be willing to make that time to attend those meetings all through the year, we definitely will not be a good fit for that taxpayer. Yeah, so on the average, there's no way any of our clients will have anything less than 6 meetings in a year with us, at least. Now, we have lots of clients. We're meeting with them every month, because their portfolio demands that, okay? And sometimes this meeting is not just only with us. Sometimes we call a collaborative meeting with their attorney, with their insurance broker, with their financial advisor, because this is investing and wealth making is a team sport. So we are not trying to be the only advisors on the table. We want to be sure that all the advice that our clients is getting from all other specialized advisors, they are properly aligned with what we are doing and what the client wants. So these things are very important. It's your money. You should care more about it.
Have you run across business owners who may be hesitant to pay for these kind of advisory services without understanding the potential financial return? Do you have to determine maybe whether a client is the right fit for you, and how do you kind of educate them about that?
Oh yeah, we come across that very often. And again, we are not a car salesmanship, right? We are not a car dealership where, you know how you go into a car dealership and the salesman is trying to make a sale. You may have a budget for a Toyota and then the person is trying to sell you into buying a Lexus, right? That's not who we are, what we are, because it's so important that we be the right fit. We do our very best to make sure I wouldn't use the word screen. We check the client from the point of, are they truly aligned? Like I said, a client has to be an engaging client, meaning when we get into this, the process is serious. We're going to do an onboarding call. We're going to assign you one CPA as your client relationship manager. And we're going to start asking a whole bunch of questions and stuff like that. Now, we do our best to kind of check the personality type before we bring in a client. Now, for example, for a client to become a client, we send them a link to a form to complete. It's supposed to take only more than 10 to 13 minutes to complete that form. If you never return that form completed before that meeting, we definitely won't be able to take it in as a client because you just indicated that you are so busy. What's very important to you, which you say is important to you, you don't want to do the work. Okay, we don't want to drive flying blind. So yeah, we do have that. And then we also do have people who get a shock from whatever they think the fee is. And I say, look, if you're going to be evaluating your decision from a point of how much you're going to be paying, then we are not the right fit. Is our fee going to be way more than what some clients are already used to? The answer is absolutely yes. But we have a moral obligation, and we tell that to our clients. If we are not sure, that we are able to bring you value over and above our fixed fee, we would not take you in as a client because that experience is not going to be a good one no matter what we do. So those are some of the things that we use to evaluate whether we are the right fit. And the way I frame it, or we frame it, is we are not the right fit for you. It's not about you, it's about us. Mm-hmm. We want the experience to be a great one.
I know that SMEED CPA presents itself as a technology-driven firm that gives clients online access to financial information and tax documents. How has technology kind of changed the way SMEED CPA serves entrepreneurs?
Significantly, in a lot of ways. I can tell you, since 2020, when the COVID year started, we have intentionally and deliberately remained virtual. What that means, even though we still have 3 brick and mortar offices, including myself, there are only, I think, 2 people that go to any of those brick and mortar locations among our team members, right? All our clients, they are served virtually. So people who come to us, they are not coming to us because we are in their neck of the woods. They're coming to us because of what the value is that they are going to get from us. And so it's also very important to us that the client must be technologically savvy, right? Because you're not going to walk into our physical office with a stack of papers. That's not going to happen. Any document you're going to send to us, it has to be uploaded. Any meeting we're going to have is going to be done by way of Zoom. Everything you need to sign, they are going to be signed electronically. We have our document collaboration system, which is an app. So using your mobile phone, you can get 80% of your interaction done with our firm. All of our team members are scattered all over the United States. We are not gathering in any one location. We are really very big. I mean, we just launched an app. It's called Trackness. It's meant for people who are real estate professionals to be able to track their hours to qualify for that very coveted real estate professional designation that is always very audited by the Internal Revenue Service. So that should give you an indication of how much investment we really put into technology. It's really the bedrock of what we do and how we do what we do. So when we have that first onboarding meeting, when a client comes in, we really walk you through our technology stack, and we will take the time. If you are struggling with it, we will take the time to onboard them on how to use this technology. Yeah.
I have one more question for you, but first, just tell me how people can find out more about, if people are interested in learning more about SMEED CPA, how can they do it?
It's easy. I just give them an email address, which is taxes@SMEED CPA. That's the easiest way. TAX as in zeros, ES at SMEEDCPA.com. Our marketing director monitors that email address. Most times people will shoot an information there. We get a lot of that. We heard you on the podcast. We're interested in working with you. And if we get such an email, we send what we call an asset map link to that prospect, which I said it's going to take you 10, 15 minutes to complete. When somebody completes that, we look at the information in there, and then they go ahead and schedule that person to meet. Most of the times, either me or our marketing director. Sometimes he joins me on those calls. So it's the email, taxes@smeedcpa.com, taxex@smeedcpa.com.
Okay, great. Hey, last question for you. You've been doing this for over 20 years. Have you, during this time, have you had like a mentor that you've really looked up to and taught you a lot, or have you learned from experience?
I have a mentor. Actually, I have two mentors. Okay. That's a great question, Chad, and I appreciate you asking that question. I think because it's so important that everyone should understand that no matter the level of attainment you have, there are going to be masters. There are going to be strategies that are above you. And you got to have that spirit and desire to constantly want to be learning. And that's why in our practice, we invest a lot of money in our training of our team. So my principal mentor is Tom Wheelwright. Okay, Tom Wheelwright is the author of the best-selling book known as Tax Free Wealth. Okay, I am not ashamed to advertise him to whoever wants to, because, and I credit him with fundamentally changing the way I look at the tax code. Okay, Tom really taught me to understand some of the things I've told you today, which is, look, the tax code is a set of incentives. Don't look at it as the government wanting to take money out of your hand. Look at it from the government has put things there, which sometimes people use that word loopholes. They are not loopholes. They are things that are codified. The tax code was not written by the poor. It was lobbied for by the rich, and they encoded it into tax laws. But you know what? Even though they were put in for rich people, even the poor guy can use the same rules. Okay, so the rules are fair. So Tom is my major mentor, Tom Wheelwright. He's the author, like I said, Tax Free Wealth. That's a book any business person should read, okay? Because when you read that book, it's going to change how you see taxes, whether or not you're a tax accountant. I promise you that, okay? So Tom, I credit him with that. His path and mine crossed getting to 8 or 10 years ago, and it has changed my relationship. It has given me the privilege, the opportunity to be on stage, not just with him, but with people like Robert Kiyosaki, because he is Robert Kiyosaki's CPA, right? I've got the opportunity and benefit of sharing the stage with people like that. So, yeah, so I credit a lot of my good success to him.
Okay. Awesome. Very nice. Well, thank you for sharing that. Hey, Michael, it's been great to talk to you. Very interesting, very informative. Thank you so much.
My pleasure, Chad. Thank you so much for having me, and have a very great time.
Appreciate it. So long, everybody.
Thanks for listening to the Top Business Leaders Show, powered by Rise 25. Visit rise25.com to check out more episodes of the show and to learn more about how you can start your own podcast.